let's get to it. Let me fix up the music, get that down a little bit, get that a little bit more under control. Hopefully you can still hear me relatively well. Alright, so what's it been? A couple of hours since I last sort of streamed? Not that long ago. Alright, let's see, what are we dealing with on the chart? What is the latest? Let's go out to the hourly time frame. You can see there's been like a number of attempts at the high here of Bitcoin. So you've got this push here, which was the all-time high. You had a second approach, which fell short. So a lower high, which is kind of concerning at the time, right? On this small time frame. But then you had a punch through that high, so you got a new high and then a brand new all-time high. So you've had like this V situation. Now, on the low side, on the support side, obviously there's this giant wick on the bottom side, which pivoted price off this fall back to the upside. What is the market structure telling us right here? We have, let's start it from here. We've got a low, we've got a high, we've got a higher low, we've got a higher high, we've got a higher low, we've got an equal high, if not technically higher high, and we're still in a bullish structure. Pick your point, we've still got higher lows and higher highs. This is all still bullish. I would not be concerned at this point of any further major drawdowns. Keep your eye on it. Obviously, from this perspective on the hourly chart, you know, you're playing more of like a midterm swing if you're taking signaling off this time frame. Obviously from a daily perspective, it's just a parabola. This parabolic trend price discovery, you know, follow the moving averages in that regard, you know. But yeah, going back to the hourly, get these lines back on. We've got structure. Basically here, this would be like a key SR level, I would say. So you've got the previous all-time high level, $69,000. We are technically above into new heights, but we have not fully departed the zone. It's not a fully strong lift-off, takeoff just yet. It's likely yet to come, but still treat this as a zone of, you know, if we lose it, we're traveling down and we're correcting a little more. Or if we hold it, you know, the game is still on. The bull trend is still intact on this medium swing time frame, right? So we got, where's ETF approval? Back here. This is ETF approval, correction. This was the last really kind of big dip off price that we had, big discount. Everything else since then has been just a staircase up, slight move backwards, staircase up, slight move backwards, up. This hiccup here was quite severe. This was like a heavy correction. I think it was like, I mean, we'll have a look at the magnitude, but that was the first lower low. This was actually quite a spooky move right here. But look, the market's not really giving many opportunities to get in on dips. You know, you have to get kind of comfortable taking what you can get, you know, using a stop loss and following it up, tracking the price. So from here it gets a bit tricky. Like maybe like just keeping in theme of these pivots and this magnitude of pullback, that kind of thing. This is just one big upswing right here. Yes, it's volatile and noisy, but this was the last like real significant dip we've had. Everything inside of that has been like a micro, I would say. More so, like, you know, you've got the behavior inside of that structure doing something like that, which is still all uptrend anyway. I don't see a reason to be bearish just yet. Yes, oscillators are high, oscillators are hot, but when has that ever stopped a parabolic trend from continuing upwards? You know, I'll show you the comparison to that. Actually, let's do it now before I forget, to be honest. Let's do it. Let's go to a different chart as well. Let's jump onto the Bitcoin index chart. We'll come back to this spot tether chart in a minute, but let's go back to the index. So this is a bit more of my macro chart view. Let's turn the oscillators on. You'll notice that on the daily time frame, RSI is relatively hot. Let's jump out to the weekly and see if it's, yep, even the weekly is reading quite hot, right? So how do you take advantage of that? Like, I mean, how do you read this and not get spooked is what I would say. Because look how cooked that RSI is, look how cooked the stochastic is on the weekly, and the MACD is very, like, it's high. Like, it's not the highest it's ever been, but it's pretty high, right? Let's take temperature of the market back in the previous bull run right here. Can you see on here the RSI reached its highest point right there, right here? Was this the all-time high? No. Were there many weeks left of price action? Yes. Many weeks. There was $65,000 as a high. This was 42. So this was, you know, a decent amount of time left in the bull cycle. Now, if you compare that moment on RSI on the weekly, we are approaching that sort of similar level of height. So I would be, you know, there is room for caution, like, obviously, but does it spell the end of the trend? And that's, I would say, no, it doesn't, because look what can happen with brand new highs on RSI. They can actually get lower while price climbs higher. So you can see RSI descending, price ascending. That's bearish divergence. This is probably what warned people of this move to come, this dump, many weeks after the high point of RSI. So in conclusion to that idea is that just because the RSI is hot does not mean you have to panic and sell everything and change your sentiment. You know what I mean? Just like over here, falling RSI, rising price, we could get the same thing here. We could get a falling RSI while climbing higher on price, you know, up to 100K even and beyond. So we'll see how it goes. I'm not suggesting that you FOMO everything in or anything like that. I'm not trying to say that. I'm just saying, don't sell yourself short. Don't cut the potential. Same with, look, check out the stochastic RSI. Look how long that stayed elevated. So it not just got elevated, right? It stayed and plateaued hot as the market ran hot, continued to stay hot for a number of weeks. This is what this flat period is up here on the stochastic. Only when we got the first significant pullback in the bull market did we get the stochastic to cool back off. And it actually didn't run hot again until we got up through this region here. to the $69,000 all-time high. Up through this area on stochastics, right? So, yep, this hasn't even started to plateau yet. It's still getting up there. It is hot, no doubt. Like, we have run upwards a number of weeks in a row, right? With barely any relief. Barely any drawdown. That's how strong this buying has been. But look, if price stays up and stays buying and trending upward, the oscillators are gonna have to reflect that. And one way is for the stochastic to stay pinned and plateau, just like through here, here, and over here. You get the gist of it, right? It stays elevated. What else we got going on? The MACD. Check out how much more travel we have in the MACD potentially. This got a high up here. Now the MACD, I think, does a better job at marking a top, which is the blue line. The MACD is the blue line. The orange line is the signal line. Just make this a little bit taller. So the actual all-time high on MACD was over here. See how bearish divergent that was? You had price travel down while getting a higher high. So that was bearish divergence, which was the hint at the bear market to come. Just as we had bullish divergence off of these lows here when you take it to the RSI. So you had higher lows, lower lows. That's bullish divergence, which was the hint of the impending bull market or bull trend. So that's oscillators. They do help you in some way, but they won't give you the complete picture. They are just like a piece of the puzzle. Guys, it looks like we're fast approaching the halving as well. Just let me check what date that is coming in at. 34 days, about a month away. 34 days and 8 hours. What does that look like on the chart? What's 35 days? Or 34? Let's include 35. Let's just go. Yeah, it's actually coming in a little sooner than I have the line here. It's coming in about there. Which equates to about the 18th of April. The 18th of April. Let me just see if I can turn on the label, the time label for this one. Okay, that's better. So the week starting 15th of April is likely to be when the halving falls somewhere on that week starting the 15th of April. We'll know more, we'll know like a bit more accurately the closer we get to the halving, like when we're only like days out, for instance. How does price behave around the halving? That's another little quick thing we can check out. You go back onto the daily chart, zoom out, find the halvings. Here's the most recent one. It was quite choppy. It wasn't just perfectly up after the halving. We actually dumped into the halving and then rose and then dumped and then rose and then pulled back. So there was all sorts of volatility around the halving. It does not mean just up. It's, you know, this one was almost not even really an impact on price. We sort of got the halving and didn't really do anything with it, you know? It was a bit of a nothing burger. Price just went sideways basically through the halving. What about the other halving? This one, a similar thing again, like at or around the halving, the days leading up and the days post halving were quite flat. You even dumped back here, rose into it, dumped, rose, flattened out, and then dumped pretty significantly after the halving rose and went flat. So there's all sorts of price action. The halving itself does not guarantee, you know, a big pump like directly after it or at it. Here's another halving back here. So even this one behaved quite differently. This was actually a bit more optimistic, you know, rallying into the halving here, like this. And then, you know, somewhat just accumulate, like, you know, it's just a gentle trend. There's nothing too crazy about it. A bigger impact than the halving at the moment is the ETF approval. I feel like that caused more waves in the market. You know, here's the rumors of the ETF getting approved, like the hype train, the approval, and then the correction off the approval, and then the rally. You know, as the ETFs go live and start bringing in demand from Wall Street, you get real world, you know, like significant funds, retirement funds, hedge funds getting in on the Bitcoin demand, basically. So overall, yes, the ETFs have been a very bullish impact to crypto and to Bitcoin, rather, namely, and likely to continue to be a bullish driver. So just because Wall Street's involved doesn't mean it just goes up only, up forever. I think all it means is you've now got more participation, you know, more people involved in the space, which means the market cap overall can grow to bigger heights than ever before, but it will still cycle. We're still going to get crypto cycles. We're still going to get recessions. We're still going to get, you know, significant sell-offs and bear markets off the back of all this. So I don't think much has changed in the sense of the cycles. I think we'll still get our cycles. But it's just the participation is higher now. You know, it's a bit of it's a bigger game. It seems like every cycle, the game's getting bigger and bigger. You know, perhaps it will plateau. It'll reach like critical mass, and who knows? I'm not sure. That's very speculative. It's looking pretty far into the future, but yeah. What else we got? Let's turn off logarithmic. Let's get rid of all of the indicators and just look at the price. What kind of elements do we have going here? Actually, let's turn log back on. Another key element of price action at each halving and around each price discovery moment as well. I know I've covered this many times, but I'm going to circle the point on the chart where price got back into price discovery, which is basically getting back above the previous all-time high. Here, and now we have another one, technically right here. Well, we're just on it. We've just come up over the previous all-time high. And what is the common behavior of that? And that is a bull trend or a bull rally, a continuation of an overall bull trend. Once Bitcoin gets into price discovery, it tends to be a bullish driver for the price. So this one was a little strange. You had a double topping bull market, basically. So we got a big old Wyckoff distribution up here, a pullback, which actually shook me out at the time. I got bearish. I was calling that was the top. This is the bear market, you know, that kind of vibe. But it did kick up one last time and got to 69,000. So from here, I think it's reasonable to forecast another somewhat move up. You know, I'm just going to argue or put on here maybe 120k as a target just for fun. Could be less, could be more. Don't be too scared to be ambitious. Obviously, keep it real. Like, I wouldn't be saying like 100, like, no, sorry, like I wouldn't be saying $1 million Bitcoin, which is, where's that? Where's a million? About here. I'm not trying to suggest that we go to $1 million in this cycle, or even 500,000. But look, some optimistic targets are like 200 to 300k. It's not impossible. It's a big, ambitious target, but I don't think it's impossible. It'd be more on track with the magnitude of these two bull runs if we got a 300k all-time high, something like that. But yeah, it's not out of the question. I just think for something more realistic, yeah, like 120 or even just 100k is like around here. You can see the diminishing returns on each bull market. You've got, the most impressive, obviously the most impressive run was the first phase, like the first all-time high run to the top here, which was what, $30 Bitcoin at the time. You can see the pattern. You turn off logarithmic and it gives you perspective on how, from a linear standpoint, like the linear view kind of puts everything into perspective. You got that move, you got this move, you got that move, you got these moves, and then something like this. So some people have very conservative targets of 80k, 90k. Some people don't think 100k is possible. Now in Static's Discord channel, he's got a little game that people are playing, and that is guessing where the all-time high is in, like where it gets in at. So basically it's like The Price is Right, place your bet. I've put mine in. What did I say? Let me see. I'm gonna go back a bit, have a look. Yeah, 210,233 was my guess. So that's all the way up here. That's seems kind of crazy, but bull markets do get crazy. Something like that. So from a linear perspective, it looks like unreal, like it looks insane, right? I get that. But that's linear, like that's a price climb. If you take a logarithmic view, like this, it starts to look a little bit less crazy, doesn't it? If you get the arcs on there, the curves, you can see all it is visiting the top of the curve. And if it happens later, as in if we get some kind of like, high point and then a retracement, and then have to work on, a rally to the height, that is when this target will likely get hit as a timing thing, right? So it could look something more like this, like that. It just depends how soon, like how fast we get our all-time high. It's very hard to predict that. If it happens faster, it might be a lower target, but if we build and spend more time trending bullish, then we might achieve a higher price, a higher all-time high. And then, yeah, you can sort of gauge with the timing. I think I've got some lines that I've drawn up for this. Let me just go back and find them. I'll find it. Give me a moment. Macro structure. Price discovery and all-time highs. The plan. You guys probably remember the plan that I drew up a couple of months ago. There we go. Market lows and market highs. So just with an average of timing, you can sort of forecast where these moments will hit. And if we follow this arc, this trajectory, that looks something like this. So from this point, you know, whatever the journey is in between these 2 points, this is where I'm suggesting it might hit based off previous behavior. You know, previous green lines and the spacing. All-time high should hit around, you know, September or October of next year. So we've still got a long journey between there and there. It's not going to be perfectly up either. You know, there may be, you know, we may set in a high, pull back, consolidate for a couple of months, and then push again, pull back, consolidate for a couple of months, and then push up and get the all-time high. Maybe that is something that could happen. Or, you know, maybe there is a deeper correction to come after the halving. You know, it's like another way to look at it. You know, maybe we do correct for 6 months after, at or around the halving. You know, we get the halving and then we spend the rest of the half year correcting down before, you know, maybe building up a rally again and having another shot at highs. That's another sort of path that gets us to that destination, right? Many ways, you know, you name it, there's different paths to get here. But just be careful expecting a direct route, because it probably won't do it like that. So, like, just for comparison, like, here's the halving point. Here's the halving of the last cycle, and here's the all-time high of the last cycle. See how it wasn't just a direct straight line to it? There was drama along the way. There was pullbacks. Here's a pullback. There's one attempt at an all-time high, then a giant drawdown, and then we had another attempt, pullback, and then the high. So the path can look like all sorts of different shapes. Like this one came up, backwards, up, backwards, up, backwards, up. This was a bit more of like a hooking pattern. It came from way down. It came from down on the baseline of this arc, actually. Whereas this one, yeah, I guess you could argue it came from the baseline too, the COVID dip, and then came up, bumped its head once, and then had another attempt. But this one, we're starting the halving at all-time highs, the previous all-time high. It's very strange. Like, the timing is a little off course from what we've had in the past. So, you know, maybe we have to do a bit of a correction off that because the timing's a bit too soon, and then come up later, you know. Anyway, here's the target for the timing of the market high, and then here's the target for the timing of the bear market bottom. So the bear market bottom I'm suggesting is late 2026, so 2 years from now, or more, just over 2 years from now, like 2.5 years or something like that. And that is like, you know, the bear market. If things play out according to this schedule, like this common behavior, and then, you know, there's the accumulation again, just like we've had here. Let me make this a little bolder. So you get like this accumulation off the bottom, accumulation off the bottom, This was like a double accumulation. Accumulation at the bottom, and accumulation at the bottom over here too. It's like, you know, these accumulation troughs happen, and there's probably going to be another one, you know, over here somewhere. So we're going to all-time high, shoot back down, accumulate again, and then, you know, rally back in to the halving. That's the best we can do as far as like predict or forecast, you know. Maybe it looks something like that. Maybe the next all-time high is, you know, around 400 to 500K. Maybe. But let's just deal with what we got at the moment. Like, that is this bull market, you know, we're still like more than 12 months away from achieving the market top, I think. Alright, I'm going to clean this up. Yeah, that's kind of just the macro, the cycle outlook that I have based off past performance, you know, and projection. Go back to the daily. Turn off logarithmic. Let's go back to that other chart that has the lines and the price levels. So right now, like, see how zoomed in we are? See how insignificant all of this chop is. Just really, on the big picture, you don't even see this. This is just insignificant intraday price action, you know? Still tradable, of course, but yeah, in the big picture, you know, go out on the daily, you can't even see that, you know, like it's just noise. It's all part of just the line, really. It's just a line. But when you zoom in, these swings become very real, especially if you're trading on leverage. So play those with caution. Yeah. Yeah, that's pretty much it, guys. That's all I wanted to really update about. Structure to the downside has not started yet. Like, we're still showing signs of support, even locally. Let me delete this line. So the last micro supports we've got on like the hourly or the 15-minute are like around here, this level. And there's, yeah, let's see what happens. I think the stock market's opening shortly. How much time is left until that opens? 57 minutes, so another hour. Pre-market is up slightly. Not all-time high up, but it is up off yesterday's close down here. So that's kind of cool. That's optimistic, right? Yeah, that pretty much covers the update. Thanks for tuning in, my dudes and my girls and my people. I'll wrap it up here, and I know this is a weird time for me to stream. Usually I stream about, you know, another 12 hours from now is usually when I do it. 11 hours. But maybe I will. Maybe I'll do another stream in about 11 hours or so. But for now, thanks for tuning in, and I'll catch you on the next one. Have a good day.